Good afternoon, everybody. Thank you very much for joining me. And very importantly, especially to me, thank you very much for being on time. Really appreciate you spending a little bit of time on a Wednesday afternoon to learn a little bit more about funding and a little bit more about property. So first of all, if I could just ask you, could you please go into the Q&A box, which you should have access to, and would you please tell me that you can hear me before I go any further? Just a quick yes, thumbs up, something like that. That would be great. Thank you, guys. Much appreciated. Yep, got that loud and clear. Excellent. Thank you. Thank you. Thank you. Now, you've used the Q&A box already. So what I'd like you to do is if you've got any questions at all during this webinar, please feel free to use that Q&A box. You've got two options, or you should have two options. One is a Q&A box and one is a chat box. If you put a question in the chat box, I might not see it because the chat box is a bit like Twitter. It just keeps rolling on through, depending on how many people, put information in there, put messages in there. Whereas with a Q&A box, I have to answer the question that's in the Q&A box before I can move on to the next one. So if you put your question in the Q&A section, I will definitely get to your question during the webinar. Like I say, put your questions in there as soon as you think of them. I might not answer your question till the end of the webinar, but I will get to your question. So if you could do that, that would be much appreciated. So that's a bit of housekeeping out of the way. So thanks very much. This webinar is being recorded. So you will be sent a recording of this webinar tomorrow. So if there's a part that you need to go back to because you didn't quite understand it the first time, you need to go back to it to make sure that you do understand it, then you'll be able to do that. The webinar will automatically be sent out to you by the marketing team tomorrow. So without further ado, let's get on. So this webinar is all about how to get 100% funding. And at the minute, that's really, really pertinent because all we're hearing from the media is that lenders are pulling out of the market. Mortgage products or lending products in general are being removed from the market, which reduces your choices of how you're going to fund your project. So how can you, if at all possible, still get 100% funding for your project? First of all, a little bit about me. So my name is Chris Kirkwood. I'm the franchise director here at Sourced. And what I do is I help franchisees. I look after the entire franchise business. We've currently got just under 200 franchisees, and they are in the business of property. They are at various stages of doing property deals, of building their property portfolio, of forwarding their property career. And we at Source, we basically help them at any stage. Now, I took over as the franchise director because I'd founded and I'd run and I'd scaled and I'd grown and I'd sold a number of different companies before I joined here at Sourced. And two of those companies that I'd founded and grown were property companies. So not only have I got good experience of building a business, which is what we're doing here at Sourced, but also I've got good experience of building property businesses and building property portfolios. I've been involved with deals from 55 grand, which was something that I added to my own portfolio, to being involved with a development that is ongoing in Manchester, which has got a GDV of 150 million pounds. So I've got a good scale of knowledge, especially when it comes to property. And as you can imagine, pertinent to this webinar, a lot of experience as to getting funding and getting the amount of money that is needed in order to get deals done. Now, with like the financial spread of those property deals, obviously comes a spread of strategies that that I've looked at and I've used and I've executed for myself. And as being part of 200 growing property businesses through the network of Sourced, I've also been involved and advised and helped out people with lots and lots of different property strategies. And I can't think of anything that we haven't been directly involved in. Even the most creative property strategies, we've probably got at least a couple of them going on at Sourced at the moment, because it's all about getting deals done. And the creative strategy at the moment might be the right one. And that's why we've decided to go with it either ourselves or through one of our franchisees. So now, like I say, I run the franchise side of the business. I take care of the marketing team, sales team. Importantly, especially for the franchisees, the support team and the events that we put on for the network of almost 200 franchisees. In fact, the meeting that I had before this one was just organising our summer ball and agreeing on the venue and like what's going to be included at the summer ball and all of that. And for that, we invite all of our franchisees to attend. Like I said, I can see somebody's put their hand up. If you've got a question, just pop it in the Q&A box and I'll get to your question. I will read it during the webinar, but if I don't get to it during the webinar, I'll choose to read it at the end. Okay, so you may have seen that Sourced has got 4 different brands on the website, and that might be a little bit confusing. So I'm going to explain just really quickly what those 4 brands represent and how they put me in the position to host this webinar and tell you from a position of authority why and whether you can get 100% funding for your property deals. So the first bit that I'm going to look at is the franchise side of the business. Now, as a franchisee, if you want to grow a property business, we offer you a franchise solution. It's not just training where you go out the door and you're basically on your own. We offer the training, but also we back that up with support and we generate property leads. You also get access to the network of nearly 200 people. And there are lots of solutions in that network. You know, we've got QSs, we've got surveyors, we've got brokers, we've got all kinds of property people in that network. And you are all on the same team working together. And then importantly, you get 70% GDV funding. Now that 70% funding comes from our sister company called Source Capital, who are also on the website. Source Capital can offer you up to 70% of the GDV. Now the GDV, if you don't know, is the end value of the project. So they're not calculating how much you can borrow based on day, what the value of the property is on day one, but they're looking at the GDV, the end value. And that opens a lot of doors to you. We'll get to that a little bit later. But essentially, it can cover all of the purchase price and all of the build costs. Source Capital has been going for a number of years. Probably one of the highlights was that we raised £2 million in just over 24 hours for one of our franchisees' deals. Source Capital also has 100% funding and repayment rate. So any deal that's gone onto the Capital platform has been funded, and then that deal has successfully worked and then been repaid back to investors. One of the big things, actually, we don't make enough noise about this. One of the big things that we do for our franchisees as well is we give them agreements in principle. So they can, our service level agreement is that the franchisee can access an agreement in principle from the lender within a couple of hours. So as soon as you go to an estate agent and you make an offer, and that estate agent comes back and they want credibility from you, they want to see your ID, they want to see an agreement in principle or your proof of funds. At Source Capital, you can have that within a couple of hours. Now, one of the things that it doesn't say on there is that Source Capital only lends to sourced franchisees. We've got a source property side of the website as well, and we use this in order for the franchisees to sell their deals. Now they can sell their deals through an app that we've created, which you can download. If you're looking for property deals, you can download the Source Property Investment app. We've got an auction side, so we've got sourced auctions where the franchisees can sell their deals. And basically, we use the property side of the website in order to attract investors in, get free downloads, get free education, access our podcasts, access all of our content, and then through the same website, they can also see the deals from the auction, from the app, that they can then go on and buy. And then we have source developments, and that's really the stuff, the big stuff that we're doing here at HQ. That shows you all of our property projects, all of the developments that are going on currently and are in the pipeline across the country. And we do this. Really, we started this side of the website because when we were tendering for deals, when we were going to secure, £1, £2, £3 million, either build sites or projects for conversion, the estate agent was asking for our credibility to see the stuff that we'd done before. We started this side of our website so that we, under the banner of Sourced, can say this is the stuff that we've done. And if franchisees do similarly sized big developments, they can put them on here as well, because under the banner of Sourced, these projects have been done. And again, as a Sourced franchisee, you can say, I am part of Sourced, and at Sourced, we have done this amount of work and these projects. Just going to go back one. There you go. So I want you to be involved. I want to ask you guys a question. And this is the question. So what level of property experience do you have? So you should see the poll on your screen at the moment. If you could just take, I'll just leave it on there for 5 seconds. So engage with it as quickly as you can, and just let me know what level of property experience you have. Now, the point of this is so that I can tailor the rest of the presentation, because if we've got some very experienced people, I might go into a little bit more of the technical side of funding and the way to structure deals. If not, then I won't go into the technical side. I'll sort of brush over it, and maybe look for a longer form sort of webinar in which to go over the content for you. Appreciate it. Thanks, guys, very much. Pretty much 90% of people getting on there. So thank you very much. And I've just removed that from you, so you shouldn't be able to see that poll. You know what? I'm going to be completely transparent with you. This is the first time that I've done polls. So it's either going to be a fantastic success or it's going to be an absolute disaster. Okay, so 100% funding. I've told you a little bit about me, told you about Sourced. We're obviously set up we do a lot of property deals. We know a lot of property. We are property people at the very core. And that's why we're the right people to talk to you about how to get 100% funding, especially at the moment when lenders are pulling out of the market. But let's first look at that. Why have lenders pulled out of the market? Why are we seeing these headlines? Why are they removing products? What's their motivation? Because certainly we've seen that there are lots and lots of property opportunities in the market, probably more now so than there have been in the last 7 or 8 years. So therefore, if the opportunities are there and the deals make sense without a lot of constructive and creative strategic thinking, why are lenders not jumping over themselves to get involved? Well, as you've probably seen in the last 12 months, all the headlines, all the media attention has been on uncertainty. It's been on the economy. It's been on the rising inflation rate, the interest rates going up in order to battle inflation, and that a couple of, I think about 12 months ago, there was a prediction of a 2-year recession that the Bank of England told us about. And that kind of headline, those kind of news articles create uncertainty. And if there's one thing that lenders absolutely hate, it's uncertainty. So because of that uncertainty, because people were going to feel the pinch, there was going to be less, mortgage rates were going to go up, people were going to feel the pinch in their daily expenses, then that means that lenders are going to pull back and reduce the amount of risk that they can see they've got in the marketplace. So again, from big sources, an IMF headline of global economic uncertainty is going to slow growth, and the BBC headline, Bank of England expects UK to fall into longest ever recession. That means that lenders protect the money that they've got, that they're going to lend out. And that means that they're going to reduce their interest rates, increase their interest rates, and they're going to increase the amount of deposit that you need to put in as well. Now, to put it in context, the predictions for how much the economy was going to drop are actually, not massive. 8% fall predicted by the Halifax, 5% fall predicted by Nationwide, 8, 9, 5%, not even into double figures. And just to be transparent, these predictions were made about 6 months ago, before we had the recent meeting from the Bank of England, in which they predicted that the recession wasn't going to be quite as long. So these predictions have probably come down a little bit, whereas Halifax were predicting 8%. They should be predicting even less now, because the recession isn't going to be as long, according to the Bank of England. But let's have a look at how this affects you. So the average property price in the UK is something like £290,000. So let's take a fairly average example of a property. Here's one for £300,000. Now, previously, you were able to get a deal that looked something like this. This is a normal standard mortgage deal where the loan to value you could get would be about 80%. The interest rate would be somewhere around 2.49. That was going to cost you, in terms of a deposit, 60 grand. And in terms of a monthly payment, just over £1,000. But all this uncertainty happened in the marketplace. And then the lenders looked at that and thought, well, first of all, we're going to put the interest rate up. And secondly, we're going to increase the loan to value that people need in order to take out our products. So instead of offering an 80% mortgage, they might have reduced that to a 60% mortgage. And instead of offering a rate of 2.49, they might offer a rate of 5.49. Now, in terms of the monthly fee, the monthly fee for taking out that mortgage actually is fairly similar. However, if you look at the deposit, because now they're only doing a loan to value of 60% and not 80%, now the amount of money that you need in your pocket to get that deal secured and to purchase that deal is now doubled at £120,000. And if you look at the overall market, that's why people are pulling out. That's why there aren't as many buyers in the market as there were 12 months ago, because you need a vast amount of money in your pocket in order to get the same deal done that you were looking at 12 months ago. And that's why we're on this webinar. That's why we're talking about potentially getting 100% funding, because this is the spoiler, there are ways that you can still achieve 100% funding, even when lenders are, for one, pulling out of mortgage deals, but also secondly, making mortgage deals more expensive for you to get into. So can you still secure 100% funding? Yes, you absolutely can. So now let's look at the next poll. So the next poll for you is going to be, how do you hope to apply for funding in 2023? So I want to know how many of you out there are actually looking at deals at the moment. So I've got 3 answers to this question. Yes, and I have the project already. So if you found the project and you're really looking around for your funding options, or yes, you want to be in property, but you haven't yet found the project because you're not sure whether it's worth looking for the project because you're not sure whether you can get the funding to the level that you require because of all the headlines, because of all the information that you've heard about property. So that's great, much appreciated. Again, I'll end that poll right now. So thank you very much for taking part in that. And I can see that there are quite a few of you actually that have already got the projects. So this could be a very important webinar for you guys that have got those projects already. Now, if you've watched any of the webinars before, I've used this slide quite a few times, and it's not, it's a very functional slide. These are your choices when it comes to funding. You've got bridging finance, you've got peer-to-peer finance, which is something that Source Capital is classed as. You've got mortgage borrowing, you've got commercial borrowing, and you've got JVs. Now, we're going to discount JVs because, JV is totally negotiable between you and the person that you're borrowing the money off. We're going to look really closely at bridging and peer-to-peer finance because they're the two that give you the best opportunity of getting up to 100% funding. A mortgage, for those of you that have been involved in property for a while, a mortgage, it says that it's based on an LTV, a loan to value, but a mortgage isn't based on loan to value. It's based on a loan to value or the purchase price, whichever one is lower. Because the mortgage company, their absolute priority is controlling the risk that they've got involved in that deal. So with a mortgage company, you are not able to borrow or have your borrowing based on the value of the property if you're buying it for less than the value of the property. And that makes sense for a mortgage. What they're low cost, they're long term. It's what you would refinance onto once you've bought the property and done the development deal. And really the finance that you're going to look for that is going to be bridging finance or peer-to-peer finance. Now with bridging finance, you are able to borrow against the value. So let's say that you've got a property deal worth £100,000. The value is £100,000. If you're borrowing that, sorry, let me start that sentence again. If you want to borrow against that £100,000, you can borrow £70,000, right? Because the loan to value, as you can see, of the bridging finance is based on 70%. And it's the same for peer-to-peer finance, based on 70%. However, if you're buying the property for £70,000, well, then you've just borrowed all of what you need, right? Because it's valued at 100, and that's where the bridger is going to get their security from. But if you're buying it for £70,000, you can borrow £70,000, then you're done. Now, I'm going to caveat that because I am going to say that a lot of, because of the uncertainty in the market, a lot of bridging companies have stopped have stopped you being able to borrow up to 100% of your funding. A lot of bridging providers have now got a limit to the amount of funding that you can get. So they might do a loan to value of 70%, but you might only be able to borrow up to 80% or 90%. So they're still trying to work in extra features that minimize their risk. Source capital, peer-to-peer funding, based on the gross development value. Like I say, if they're looking at that end value for the property. So source capital, and I'm going to go into this in a little bit more detail because I think there's there's more flexibility within this than you can get from a mortgage company. You can get from a bridging company. So source capital is classed as a peer-to-peer lender. So what they do is they go out there, they find the money through the general public, and then they pull that into a loan, and they loan that out to our franchisees in order to get deals done. 70% of the GDV is their absolute gospel limit of what they can borrow to put into any deal. So let's look at two property deals and how that works. So the property deal number one, which does not require any kind of refurbishment. This is just purely a below market value purchase. So the purchase price is £245,000. The value of the property is £350,000. That's a loan to value of 70%. And through source capital or limited number of bridges, you can borrow the full purchase price. Second, let me just go down one. The second example, this is based on the loan to GDV. So the purchase price for this one is £150,000. This does require refurbishment, and that's 95 grand. And the GDV for this one is 350 grand. This might be a title split. It might be a HMO. It might be, a pretty significant refurbishment. But again, you can borrow 70% of that GDV, and therefore you could borrow, in this case, up to all of the purchase price and all of the refurb cost. Therefore, you're not dipping your money into your pocket for either anything to do with the purchase price and anything to do with the refurb cost. You don't have that massive deposit that you need to pay. Now, these are perfect situations. These are ideal situations, but I know I can hear you thinking of the question, yeah, but I can't achieve so much of a discount. I can't buy a property. If it's a standard flip that you can see from Property One, I can't buy a property that's valued at 350K. I won't be able to get that for 245K. I understand that. And that's where the creative thinking comes in, to find a solution for that deal to mean that you still have access to the 70% funding. And that's all you require on completion. So you can get that deal done and you can add that property to your portfolio, or you can have access to that profit margin that you're looking for. Oh, let me just go back one to make sure I haven't missed a slide. So how can you create a situation where the lender finds it really, really tough to say no to a deal? So you lower your day one borrowing. Now, what do I mean by that? Let's say that, using the previous example, property valued at 350K. Let's say that it's on the market for 300K. Right? It doesn't need a refurb. It just, they're a motivated seller, so they're selling it at a discount. It's on the market for 300K, and you know that based on 70% loan to value, you could take that property deal, but you'd need to put a deposit in yourself. Well, how about, instead of putting a deposit in yourself, you say to the vendor, that you'll split the purchase price. So on completion, I'll give you 245 grand, and that sits perfectly for your 70%. And then what I'll do is I'm going to flip the property on. I'm going to sell it. And when I sell it, or when I get it refinanced, I'm going to refinance it for 350K. When I refinance it for 350K, I'll give you the other 55 grand to make it up to the purchase price that you originally had of £300,000. So I'll give you 245 on completion. I'll give you 55 grand after, let's set on an agreement of 6 months, because that'll give me enough time to refinance. So you're still making 300K. It's just spread out over a period of time. In fact, what you would probably do is give them, I've used a different example here. I've used an example of, I'll give you 150 grand now and 160 grand later. So now you're not making 300 grand. You only want 300 grand for that property. I'm actually going to give you 310. But in order for you to get slightly more, you just got to wait a period of time before you have access to that second payment. So you're incentivizing them to leave some money in the deal, and that money that they leave in the deal acts as your deposit, which means that you don't need to put your hand in your pocket to get that deal done. And you'd still make, from that example, you'd still make 40 grand. So you still get that 40 grand. Now, I know that some of you out there, especially the experienced guys, are going to say, yeah, but you haven't taken all the costs into consideration. I appreciate that. This is not a real property project. This is just an example to show you how to understand, to show you the mechanism, to make sure that you can understand the mechanism that reduces the amount of requirement on your deposit. This structure also can help with down valuations, which we're seeing quite a lot at the moment. So you see a down valuation, you can go back to the vendor of the property and say, listen, I can't give you this. I can't give you this on completion because look at the valuation. So the way that I'm proposing that we can still get this deal done is if I give you part on completion and part later. That works really, really well. Now, it does depend on your ability to build a relationship with the person that's selling the property. Because it's tough to go through an agent and then through the agent negotiate this kind of deal. You really want to have communication with the person that owns the property. You want to find out about their situation. You want to find out what they're doing with the money that they're going to make from that property project. You want to find out where they're going to move to, if it's something that they're going to invest, or if it's something that they're going to put towards their kids' school funds, or whatever it is. You want to know what they're going to do with that money, because if they need all of the money on completion, there's no point in negotiating because they need all the money on completion. If they don't need all the money on completion, though, that's where your in is. So the last time I negotiated this kind of arrangement, it was an £880,000 purchase. And I knew, because I went to the viewing half an hour early. And at the viewing, I stood outside. I didn't sit in my car. It was in a car park for the building that I was looking at purchasing. And I stood up by the side of my car and waited for the vendor to come out and speak to me. And out of that £880,000 that I was proposing to pay for that building, he actually needed 250K on completion. That's all he needed. So the structure of my deal was, I'll give you that 250K on completion. That's all you need. The rest of it, I'll give you after a set period of time. And we structured the deal so that it worked for him, importantly. So he got his 250, but also for me, so that I could get the property deal done. And I didn't need to put in as much of my money as I would have from traditional lending. I'm just looking at one of the questions. I'll deal with this question now. So if you split the purchase price and pay only part of the purchase price upon completion, what security will the seller have? Brackets, assuming your own lender will want a first charge on it. Great question. There's a number of ways that you can offer security. So you could offer security if it was a smaller amount of money, 30, 40 grand. You could offer something called an RX1. So that's a restriction against the property. It doesn't have the same power as a charge, but that restriction is registered against the property on land registry. So that's the first thing that you could do. Secondly, you could offer them a shareholding into the SPV that holds the property. So just to unpack that a little bit for the guys that don't understand, you can own a property within a limited company. If that limited company only holds that property, that's called an SPV. So just as with any sort of limited company structure, you can set and arrange and distribute the shareholding for that company as you see fit. So you can offer them shares in the limited company that owns the property. That's a second way that you can offer them security into the deal. Or depending on the permissions of the lender, you could offer them a second charge. So you've got a number of different ways that you can offer them security. But the first thing, or like a loan agreement, a personal guarantee, lots of different things that you can do. The way that I would structure that deal is I would find out what security they're looking for. Because if they're quite happy with something like a restriction, then I wouldn't offer them a shareholding of the company, because I want to keep that for myself. It's just because it's easier, the paperwork is easier. The RX one is very easy to do and it's very cheap to do. So a number of different ways that you can do it. I hope that answers your question, but that really isn't an issue. And if you get to that point of the negotiation where they're looking at security, then well done, because you've got through that, and they're thinking about, what's going to happen with their money once it's invested. They're thinking about, the mechanism, the mechanics of it, which is great. But there's a number of ways that you can offer them security. So that really isn't an issue. Again, what we do here at Source, we have lots of different training videos based on all of those kind of questions. There might be a 30-minute training video, it might be a 10-minute training video, 5-minute training video, it might be a 6-hour course that's split up into 20 videos. But we have that kind of thing available to our franchisees. So that's a really good question. I'm quite impressed with that. So creating a situation where you don't need them. And I think you're probably going to have the same the same question here, but from the other way around. So using vendor finance. So just cut the lender out completely. There are plenty of deals, especially at the moment, where you can JV with the person that owns the property in order to get that deal done. So you might know this kind of situation or this kind of strategy known as an assisted sale. The vendor stays in the deal. So the negotiation that you have with the vendor is you go to them and you might have seen a property that's been on the market for let me just go down one slide, been on the market for 6 months and it's empty. So they've probably inherited that and they're not making money from it because you can see in the pictures that it's empty. So the sell that you would have with that person would be, I can see that this property's been empty for 6 months. Now, how's about I put my money into the property, we upgrade the standard of the property together, and then we put it back on the market once it's been refurbished. Now, once it's been refurbished, properties around here sell within a couple of months. So it will only take a couple of months to sell it once it's been redone. Now, you could, if you want to, leave it as it is and still have it on the market in the next 6 months. Or we could take it off for 1 month, get the work done, relist it, and then sell it within 2 months. So my proposition is actually going to sell the property quicker because we should be sold within 3 months. So it's an option for the seller to sell quickly, which they don't initially understand because they think, well, you're going to do work on it. Surely that's going to take longer. Well, it's been on the market for 6 months. So it's reasonable to think it's going to be on the market in another 6 months. So why don't we do this? And then we'll be able to sell it afterwards. Now, importantly, I don't know whether some of you might have noticed, some of you might not have. I didn't mention the price that we were going to sell it on for, because my negotiation in that is that we'll sell it once it's been refurbished, which means it's going to sell quicker. And once it's sold, I will give you what you're looking for today. So you might be looking for 100 grand. If you sell it to somebody else, you're going to sell it for 80, 85, 90. You know you are, because they're going to chip you down. They're going to look for a discount. You want 100 grand for this property. You're not going to lift a finger and I'll give you 100 grand for this property. Now, obviously, once you've put your money into it and refurbished that property, it's probably going to be worth, let's say you put 20 grand in, it's probably going to be worth 150 grand. Now that difference, you're going to give that person 100 grand. That uplift, you would first of all take the money that you put into it, the 20 grand, because that's the money that you put into it to uplift the value of the property. And then that additional 30 grand, that profit margin, you would want to take. I wouldn't initially offer that as a split between me and the vendor of the property. Now, obviously, they might come back and say, well, you're going to sell it for more. I want more of that money. At which point you can negotiate with them. You can offer them a little bit more. You can offer them a bit more of an incentive to go higher than the 100 grand. But essentially, then they're doing no more than they currently are in order to make that money. So you pay for the upgrade, you relist the property, and then you sell it, and you sell it for the higher amount. So they win because they sell the property and they get their 100 grand. You win because you make that profit margin, and the estate agent wins because they've now sold the property or resold the property for a higher amount, and therefore they're going to get a higher commission fee. Now, in that example, you don't need to arrange finance, and therefore you make 100% of that capital uplift. Now, one of the ways that you can structure that, if you're thinking, yeah, that sounds ideal, I love that strategy, but I haven't got that amount of money in my pocket, well, go out there and find an investor. Find an investor, borrow the money, give them a 20% return. I don't know, whatever you feel comfortable with, give them a return, and then you pay them back, you pay their return back, and you're still making the majority of the profit from that deal. So all you're doing is you're sitting in the middle. You're basically acting exactly like a bigger scale developer. You're organizing everything, and you're making the profit. I've got another question. Let me just go there. How would you structure the legals ownership for vendor finance? So again, good question. There are 3 contracts that you need in order to get an assisted sale done to give you the necessary security over your investment. So first of all, you would need an option agreement. Secondly, you would need an RX1, as I spoke about before. And thirdly, you would need a restricted power of attorney, which specifically refers to the property. Okay, so I hope that they're the 3 contracts that you need, and that's how you would structure that deal. Just got another question through, so let me just read that for a second. In this example, what about the interest costs over the period, if rolled up, could reduce the profits? Of this example, the interest costs for what exactly? I don't understand that question. Can you just elaborate on that a little bit? Interest costs for what? Because if I'm putting my own money in, there are no interest costs. If you're going to offer 20% on somebody that's put in, let's use the previous example. So they put in 20 grand, and you're going to offer them 20%. And let's say that you're going to borrow that money for 6 months. So actually you're only paying them back 10%. So that's going to be 22 grand that you're going to pay them back. Well, there was a 50 grand capital uplift. So even when you've paid back the investor 22 grand, you're still making 28 grand. And there's been no risk at all for you, but you get access to that profit margin. I hope that answers your question. If that is what you were trying to get at with your question. But thanks very much. All smart questions, thinking about the stuff that's really important. So well done. So do flexible vendors really exist? I mean, I'm talking about this really flippantly, aren't I? I'm saying, you can get somebody who's going to agree to that, going to agree to this. Well, absolutely they do. Of course they do. And at the moment, they're really more common than they have been for since 2007, 2008. Because currently there are lots of people sitting on the property market wanting to sell their properties, but they can't. And they can't because lenders are pulled out. And because lenders are pulled out, that's withdrawn buyers from the market. So now there are fewer buyers than there have been for a long period of time, but the sellers are still there. And that creates the situation where people get more and more motivated to sell. So the trick is finding them. So how do you find them? Well, I'm not going to beat around the bush. That's one of the courses that we offer to our franchisees, to show them how to find motivated sellers. And when you find that motivated seller, and I'd say one of the main things that holds people back from finding motivated sellers is because what they think about is the property. They look at a property and they say, that's a nice property. That property looks great. Why would they be motivated on that? I'm not even going to make an offer on that. But it's not about the property. It's about the person that owns the property. It's their situation that creates that motivation. So have they inherited it from somebody and they have no way of paying for that property, paying for the upkeep of that property? They just want to get rid of it. Has something happened in their personal circumstances that means that they've got to move out? Have they, got into a situation where they're in negative equity and they've been offered a job 50 miles away? And they're in a position where they have to get out of this property, but they can't because they don't have the extra money to release them from the first charge lender. Well, these are all solutions that we have. These are all questions. These are all problems that we have solutions for here at Sourced. But essentially, it comes down to the same thing. And that thing is, you've got to get out there and talk to people. I gave you a real nugget, which I don't think, I reckon about 60, 70% of you won't have even, taken note of. The nugget of information is when you're looking through Rightmove or Zoopla or Gumtree or wherever, if you see a property that's been on the market for 6 months and the images show that it's empty, then that is your prime candidate for a motivated seller. because like I say, it's sitting there and it's not making them any money. So find that property, look through, find those properties, look for repossession properties, look for repossession properties that have had an offer accepted on them, and then that offer falls through. Go through the auctions and find the properties in the auctions where you can see that the seller is motivated to sell because of the start price that they've put on there. And you can always make an offer before the auction even starts. But bear in mind, it's never about the property. It's always about the seller of the property. Just had a question to please repeat what you said about the restricted power of attorney. So the 3 contracts that you need in order to do an assisted sale are an option agreement, an RX1, and a restricted power of attorney. So in order to have access to all of the stuff that we create, all of the knowledge that we have here at Sourced, this is what we offer, and this is what all of our franchisees have agreed to. As part of the package, all of our franchisees get on-demand property support. They actually have the power to book into their support person's calendar whenever they want to. There is no restriction on that. They come to induction training, which is a 3-day course. And then after that, all of their training can either be done in person at our HQ, or it can be done online because all of our training courses are online. They can actually, all of our franchisees can JV with us, and out of the £50 million worth of property that we've added to our pipeline over the last 12 months, about 35 to 40 million is JVing with franchisees. We have a tried and trusted business model. We've got nearly 200 people that are using this model. You obviously get access to funding, and that funding through Source Capital is at the levels, and they would agree to fund to the level of if property is valued at £100,000 but you're buying it for 70. They do those deals all the time. We've got an exclusive network of over 180 franchisees, just under 200 now. Deal calculators to help you look at your deals, comprehensive training in person and online. We've got auctions, we've got an app to help our franchisees sell their deals on. We have guys in the support team who focus solely on your business plan and the way that you're going to grow and create goals, and then set accountability meetings with you to make sure that you're on target for where you need to be. We give you property leads, and then we have a number of partners for which you can get discounts from. And for that entire package, for a 5-year term, this is not every year, this is on a 5-year term, 12,999 plus VAT and £245 per month. That's it. So let me ask you a third question here. So now that you know about the kind of structural and the creative ways that we look at property deals, are you interested in joining? Would you like more information? Because if you would, put your name down here and I can send you more information. It'll probably come out tomorrow, but I'll send you more information about joining Source. I'll send out a brochure for you so you can find out a little bit more. The brochure will obviously go into more detail as well, so you can find out more details about coming on board. So let me just leave that on for a second. Lovely picture of a house in the background, isn't it? And thank you very much. I'll end that there. So one of the things, if you're a little bit unsure about joining, get out your phone, click on that QR code. We hold discovery days. The next one is on the 28th of February, and that's going to be actually at our head office. You can come do a discovery day where we take you on site at one of the developments and we show you the development. We tell you about the things that have gone really well with the development. We also tell you about the things that haven't gone really well, because it's a learning opportunity for you. And then in the afternoon, we'll give you lunch. We'll treat you to lunch. And then in the afternoon, we'll go into Sourced a little bit more. We'll talk about Sourced. You can answer your questions. You can meet us face to face. We can have that conversation face to face, and we'd be delighted to see you there. So if you're interested in that, you can book onto the discovery day right now as well. Again, I'll just leave that up for a second. And obviously, like I said before, you're going to get these slides. You're going to get this recording tomorrow. So if you want to go and see this tomorrow, you'll have the QR codes in the email too. Just had another question. Let me just pop through that. So how do franchisees maximize their return on investment? So let me tell you what happens when franchisees first join us. When you first join us, you'll get a course of onboarding videos to make sure that you're up to speed with everything that you need to know before you come on induction. And then you come on induction training and we spend 3 days together. That'll be you and me. You, me, and a room full of people that are joining at the same time. We'll spend 3 days together talking about property, talking about deal sourcing and packaging and how to sell deals, how to find deals, and where to go next for all the facilities that you need from the package that we offer you. You'll then book yourself onto the Source Summit. Now, we hold these every 90 days. We invite all franchisees to come. And this summit, you have a 90-day planning session. Your support person's going to be there. They can sit down with you. They can help you with your 90-day plan, and they can set up accountability meetings with you to make sure that you're going to be hitting your targets all the way through your journey as a franchisee. So you have those goal setting meeting. You have that goal setting meeting with your support person, and then you, based on that goal setting meeting, you can then say, well, I want to do this course and this course, but not that course and that course. So you get to pick and choose from that huge array of stuff that we offer you. You get to pick and choose what you need based on what goals you want to hit. So it's all completely bespoke to your goals and where you want to be with property. And then your support person will have that monthly accountability with you to make sure that you're hitting those goals. Obviously, your support person will also be looking at your deals and analyzing your deals. Every deal that comes through, they're going to have their eyes on to make sure that you're looking at the right thing. You're choosing deals that have got the right margin. You're not wasting your time, and you're negotiating effectively. And then, like I said at the very beginning, you get access to ad hoc one-to-one support. You can book into their diary whenever you want to, whenever you feel like you need the help. Let me just go back to polls. And then finally, I have one more question for you. So now that you know about the ways that you can achieve 100% funding, is that still something that you want to do? Do you still want to do property? Do you want to be involved on a day-to-day basis? Or actually, are you more interested in doing or making a return based on money that's put into property, but you don't have to be involved? So let me know. I'll leave this on for just about 5 seconds or so, but it'd be really great to see where we currently fit. Because what tends to happen is when people see that, property is an everyday game. If you're doing a development, if you're doing a flip or a refurb, if you're there every day, you're maximizing your chances of making money from that deal. But if you can't do that, if you can't commit to that, then either you need to accept that your profit margins are going to be lower, or actually, is that for you in the first place? Should you be looking at parking your money somewhere and then making that return without having to get involved? And that's the last poll. You'll be delighted to hear. The polls worked all right, didn't they? I thought we had no significant problems there, which is brilliant. So thanks very much for your time. Really appreciate it. Obviously, if you want to go forward with this, you've got the discovery day that you can come to. And you've got the QR code on the discovery day. But also we've got 2 franchise managers as part of our team. And if you're interested in just taking this forward by arranging a phone call with either one of our franchise managers, you can click on their you can scan their QR code now. So you can either speak to Sam or Jordan, and you can scan their QR code, you can see their diary, and you can book straight into their diary. So you can arrange a call based on finding out more about the franchise. So again, I'll leave that on for a second while I'm answering the questions, because I can see I've got a few. Can you share the poll results? I'm not sure if I can, Zafar. It's a good question. Like I said at the beginning, I've never done this before, so I'm not very experienced with polls. I don't think I can now, because polls have completely disappeared from my screen. So not now. Sorry about that. Is there a franchise fee or cost? If so, what are they? Yeah, I think it's on the slide, so you'll be able to see it's $12,999 plus VAT, and then a monthly charge of $245 plus VAT. When you lend 70% of value, how do you then treat the interest on the loan? Do you allow rolling it up before exit? This might take the borrowing above 70%. You do. So with Source Capital, yes, it is. The interest is rolled up. And that's payable at the back end when the loan is due. Any other questions, please? Fastest fingers first. Get in there, get into the Q&A box, because I'll just be around for a minute or so. And then I will leave you to your Wednesday. Okay, no other questions have come up, so I really appreciate your time. Thanks very much for being on here. All went well. If you've got any questions going forward, we've also got the email address on here, franchise@sourced.co. And you can email us any questions, or you can just scan the QR code and speak to Sam or Jordan. I've just got one more question. Are there in and out fees? Yes, Rick, there are in and out fees. There's fees in and there's fees out. Although as a franchisee, Source Capital only lend to franchisees, but for our franchisees, for their first deal that they do, we don't charge any in fees. We just take those in fees, we put them at the back end, and we charge them out fees. So imagine that you've got a lender who not only will only charge you out fees, but also rolls up all of your fees to the back end as well. So trying to minimize the impact on your pocket, which is a huge advantage to our franchisees. And we can only do that because we have such a close relationship with our franchisees. I don't think you'll find anyone on the open market offering you something like that. So that's where we are. Really appreciate your time. Thanks very much for spending it with me. Have a great Wednesday.